mechanically it held this first time on the overnight. It was probably a good spot for these guys to cover some shorts.
Yeah.
But
yeah, I didn't catch it, but it's a shame.
I guess that 07 level is will be kind of a pivotal point today, right?
I guess so. Jim's going on about the 08 level.
Yeah, the 07, 08 level.
Yeah.
We talked about that a bunch on Friday as a level.
Right. Okay, I may as well start actually.
Yep, good to go.
If everyone's ready. Okay, so overnight, Asia, most of the markets were down. The Nikkei was down 1.8%. China had some positive data. Shanghai was up 2.52%. Europe has made a complete turnaround, so it started really strongly, helped by the Chinese data, but then the markets reversed and ended up being down. On the economic front, there's absolutely nothing today. Obviously, Wednesday is the big day, FOMC day announcement at 2 p.m. You should see the monthly on my screen, and you can see that we did stop one time framing higher on the monthly as of last week. There's still this two-month balance here, so I think this could be a look below and fail, or it could be a look below and go. It's I guess we'll find out today, but we should keep an eye on this. This is, by the way, the big contract, and it's the continuous, not the March, so the levels might be slightly different, but the picture should be the same. Turning to the weekly. On the weekly, very similar. We have a kind of balance area. We have looked below. Whether we keep going or whether we fail and get back into that balance, again, we'll see later on. And then looking at, now this is March. I've adjusted my daily to March. So basically, we are now in the middle of this. I've divided these balance areas. So I've got an upper balance area, middle balance area, and a lower balance area. The divide there on the March was 20.25.75. That proved to be resistance on Friday, and we stayed below it. So we're kind of firmly in that balance area. So either we get back into the upper balance, or we target the low of that green balance area, which is 71.75. And then if we break through below that, this big balance area here is huge, but there's not an awful lot of support below that. There's a couple of days, and then you go right down to this is October the 2nd, where you have a low of 1874.75. So if the market does break down, it has quite a long way to fall. Turning to the profiles. Okay, not yesterday, Friday, obviously we had a big gap down, and although we rotated for a while, we then went down, so I would say attempted direction was down. The volume was pretty average, 4.29 billion. There was very little attempt to fill the gap. As you see, my C period went up and went to that kind of balance divide, just a tick short, and then we fell away from there, so it couldn't get back into that upper balance area. Value was very clearly lower. The high and the low had excess. The POC was 8 wide. It was at 2012.25. There are some naked POCs and VPOCs. There's a VPOC at 1994.50, and there is 1989 a naked POC, and above we have a couple. A VPOC at 2032 and a POC at 2035.50. So we're now in that sort of middle balance area, which I have at 71.75 to 2025.75. There were lots of anomalies made on the way down, which shows emotional selling in the day time frame. I think for me, this 2015 level is going to be very important. 2015 was the afternoon rally high in my J period, and I think there's certainly going to be stops above that. In terms of inventory, I totally agree with Jim. The inventory short. I think both the swing traders, the short-term time frame is short, and the day time frame traders are short. Sure, I mean, if we turn around, there could be a short squeeze, but on the other hand, at the moment, where I slightly disagree is they're winning. I mean, they're getting paid for it and paid well for it. So I don't see the pressure at the moment from being short. In terms of where I'd guess the stops are, I would say certainly above the afternoon rally high at 2015, and then above the previous day high, which coincides with that balance divide. And if people were long, I would guess they just have the stops below the previous day low. Overnight inventory, it was 100% long when I came in this morning, but that largely corrected. Now it's rallied quite hard, so I would actually right now say it's neutral. In summary, the market it's started to break down out of the monthly and weekly balance areas, but it's still too early to tell whether this is going to be a failed breakout or one that goes. Inventory short. I have my ruling reason as that afternoon rally high, and my scenario is kind of based on that. So scenario number one is open in Friday's range, but gain acceptance below that afternoon rally high, and even if we stay within Friday's range, I'd say that was negative for the market. Scenario two is we open in range and quickly test the afternoon rally high, and if we get above it and get accepted above it, I would say that that's a clear rejection of the breakout to the downside out of balance. Scenario three, we open and test the low of Friday. Acceleration below would obviously be very negative, and I had a gap scenario because we did look like we could have a gap earlier on, but that again now seems like it's off the cards. That is it. Any comments, please jump in. And just as a reminder, we've got JD at 9 o'clock.
Thank you, Simon. Well done. There was something in the report that I wanted to mention that sort of fits with kind of one of my theories around rollover and why things are a little bit more choppy. And pull it up here just a moment. It was on the third page, item 1. It said it's not uncommon for the first couple of hours. Just a moment. Minimize the screen here. It's not uncommon for the first couple of hours following expiration to see trade related to the expiration. This is not directionally related trade. And the way something I've kind of had theory about is that, you know, as people are either carrying over contracts or getting out, whatever, that just throughout the day, and he's saying early, you know, in the first couple hours, but things, you know, orders are put in that aren't, I don't want to say they're random, but they're just, when they're executed, it has nothing to do with anything that's going on per se. It's just like on that day, you know, those orders are waiting to get knocked out, and it kind of can add to some choppiness. Anyway, just a thought.